Hello, everybody who is joining me. Let me get our screens up here. And we will get started. Let me get my phone set up so I can see your comments. Just give me 1 second here, guys. While I'm getting everything set up, you can see so far ES is moving to the upside. It started right there it opened at 2363.50. Good morning, Grayson. Good morning, Grayson. Okay, so we'll let some people join. I see there's just a couple of you so far. Let me get this set up so we know, what did we say, 2363.50. So I'll put in our opening price level. You guys know how this works. This is so we know throughout the day where price activity is occurring. Is it occurring above or below opening price level? This is for regular trading hours. I'll just extend that to the right. I can remove this. Up here was the overnight opening price level, which can now be removed. So as you can see, overnight, what did we do? We moved down, right? Until we went limit down right here, and then that's when they shut it off. Then we gapped down, we spiked up, and right now we're coming back down towards opening price level. As you can see right now, advancers are only at 109, which is to be expected, right? Because so many things were gapping down. All right, let me check on something while we're getting going. Okay, I have a GDX trade going currently. I'm just barely green right there. You can see I'm barely green. So I'm short GDX. So I'm hoping to see that fall throughout the day. Obviously, I'm in the trade until Friday. So no big deal there. But I got into it end of day yesterday, thinking we would probably be gapping down overnight, which we did. Excuse me. There we go. We got a couple more people joining us. Okay, good morning, Al. Good morning, Sunny. I know we have Grayson on here. So thank you everybody who's joining. And I apologize that it took me a few minutes to get on here. I was working on something else. It was Simple Trading Life related, but kind of got caught up. And then when I came down to get everything hooked up, my kids had moved some of the stuff in my office here, and just took me a few minutes to get going. All right, so again, we're watching price action here as it's steadily falling back towards the opening price level, which was right here, our purple dashed line. Okay, and I'm watching GDX as it's continuing to fall right now. As you can see, my profit is going up. It was at $8, now it's up to 20, 22, so I'm going to keep flipping back and forth and looking at that. I also have it over here, so I can watch and see if it's going up or down. I know Sunny was wanting to look at Apple, so let's look at Apple first. since I wasn't able to get to it ahead of time. All right, so Apple gap down. So right here's where it opened. So here's where you would draw your purple dash, well, excuse me, down here. Your purple dashed line would be drawn right there. We'll just go ahead and put it in. Opened at 239.75. 239. We'll get this set up. 239.75 was opening price. Put in our dashed line. And I always try to keep my lines and colors consistent. Okay, so there was opening price level. So significant gap down. It spiked back up. We're right underneath, we're just above right now, this resistance level at 242.37. But obviously we've got 21 minutes to go on this opening candle. So we'll see where it ends up. Advancer still only at 110. Okay, some of the levels around here. Below 224, is that 26 or 76? I think it's 26. So that's the next level below, next level above, 247.65, and above that, 266.42. So we'll see what occurs there. Let's go back and take a look at ES. I think it's starting to, nope, still just kind of trapped in between here. Okay, so price is just right now trapped in between 2406.25 and the opening price level. What we'll do is we will set an alert just below opening price. Let me do this. Okay, so if that alert goes off, we'll know that it's falling. I'll set another alert right up here. And then that way we'll know if price is rising. Okay, so we have an alert here, an alert here. If either one of them goes off, then we will know what's going on. Okay, I wanted to look at couple of Forex things. We'll just bounce all around. So I posted this chart in the premium room. I just wanted to show everybody if you like to day trade or scalp, how you can use supply and demand. A lot of people think you can only use supply and demand if you're swing trading or taking maybe longer term day trades, but that's just simply not true. You can find levels on any time frame. And so you would then just trade the levels on that time frame. Now, higher time frame supply and demand zones are always going to be stronger than the lower time frames, but the lower time frames are also frequently respected. Give me 1 second here. I want to check something. I want to make sure. Get some light here so you guys can see me better. I'm just discombobulated this morning because of, there we go, of things being out of sorts. All right, so here we go. So as you can see on my screen here, starting way over here, right? So, and this was on March 13th. So we came up here, we created supply, we dropped down into a demand zone. What did we do? We bounced, right? So we bounced up here, we reversed back down. Where did we go to? We went to a demand zone. As soon as we touched it, we bounced, right? So this here, I'll just tell you, 47, and the high was 106. That's exactly 100 pips. That one bounce right there, and it was 30, an hour, 2 hours, 2.5. So in 3 hours, you could have had 100 pips right here on that bounce. Okay, first touch of the demand zone. That's why I cut it off. So it came back down, came up, came down, created demand here, went up, created supply, pulled back down into demand, bounced right back up into supply, bounced back down. Okay, then we came over here, created demand on the way up. We went up almost to this resistance level, right? And it's possible that I have that a few pennies off, okay, but almost to it. Reverse back down. Where did it go? It went to the demand zone. It bounced. Where did it go from there? Right up into supply, and it bounced. This is the move I talked about in the room that I missed because this was at 2 a.m. I actually went to bed about 1 a.m. Grayson knows that because we were talking. We were chatting online. But from the top of this zone to the bottom of this zone was 57 pips, and it happened in about 2 to 2.5 hours. Okay, so down here, that was 100 pips in 3 hours. This was 57 pips in about 2.5 hours. And what did it do when it hit supply? Bounced, right? And now it's going higher. So I have an alert set up here. If we get all the way back up here, it's likely that it'll bounce back down, right? Okay, and where would it likely bounce down to? Well, let's look. All right, it's left this area in a pretty strong fashion. So I'm going to go ahead and draw in a zone. And see, this is on one name, one currency pair. You can do this with every currency pair. You can do this with any name that you like to trade, or, like I've got my watch list over here, and I don't even have the currency pairs on here, okay, because I trade them on Forex.com. But you can have all of those over there, and you can do this on every single one of them, have your alerts set, and then as your alerts go off, you're ready to take trades, right? Okay, so where would we draw this one in? Right here, open 107.47. You're going to come down to the lowest point of this, and you're going to draw it across. Let me just do it like this so it'll be a little bit longer. So the lowest part of that, you're drawing from the top of this body, the first red candle after the move away. If it was going the other direction, it'd be the first green candle. Okay, first red candle and the lowest point of the base. So even if this, just say this wick came down a little bit further, then that's where you would draw your zone. But both of these wicks are equidistant. So draw it across. All right, and there's my demand zone. So if I squeeze it in, if we come up here and we bounce, where are we likely to go? Back down here. Then we'd be likely to bounce again and go up, and then we would be looking for the next supply zone, right? If this gets up here and bounces, I will then cut this off because once it's been tested, it's not as reliable. It may bounce a second time, and in very rare cases, it may bounce a third time, but that's rare. Remember, I showed you guys yesterday a chart where price had bounced 3 different times. I think that was in a demand zone. That's rare. And then I said to you guys, the next time, I believe, was that on oil maybe? Anyway, I said, I do not believe that zone will hold anymore. I mean, 3 times is a lot for it to bounce. And then it just sold right through. Okay, so you guys see this? What I can do is, let me do it like this. Again, give you a little bit better view. What's going on? All right, you see how you can do it? This is on one name. You could do this on anything. This is a currency pair actually, and just see how it goes from zone to zone. Okay, came up here, came down, created a new zone right there. Okay, somebody may ask, why did I not draw it up here? Okay, because that's not a very aggressive leaving of the area, right? Just a couple of small red candles. Then we based here, and then we got the bigger red candle dropping away. Okay, this bigger red candle. Okay, now we're on a smaller time frame, so these are just, I'm looking for scalps, I'm looking for day trades. We come back up, we test it right here, we leave, we test it, and what does it do? Sells off immediately down to this next demand zone. And then what does it do when it gets here? It bounces immediately right back up to supply. Okay, and then it bounces down, and we come up, and we've created demand here on the way up. And as you can see, we're headed up here to supply right now, but we have this alert set, so we'll see what happens. We come back and look at the market. Basically no change, right? Still in this area here. Just when we left, it did come up here and bounce because my alert went off. All right, it came up here, but then it knocked it right back down. Okay, so let me set the alert again. Just give me a second here. All right, so I have the alert set again in case it starts to go up. First red candle after a move upward. Okay, yes, so Grayson and Sunny, I see both of your comments. Let me go back to that chart since I already have them drawn in. USD, JPY. Okay, so the question is, how do we draw them? I went in too far. Hang on a second. There we go. All right. First red candle. Okay, if we're drawing in demand, first red candle going back from where it left the level using the top of the body, and then you draw it down to the lowest point. And that could be a wick, or it could be the bottom of a candle if there's no wick, to the lowest point of the base. Okay, so if you see, let me move it over here. Where's the base? Right here. Okay, this is the base. That's the lowest point. This is the top of the first red candle, so that's why it's drawn in right through there. Now, there are exceptions, and when we come across them, I'll point it out. All right? When I come across them, I will point it out. Okay, so here's another one. See how it left the level in a strong fashion. We're taking the top of the first red candle back and the low point of the base. Here's the base, right? So we had a drop, base, rally, which are the best zones for creating demand. And when you have a rally, base, drop, those are the best zones for creating supply. Now you can have supply and demand on rally, base, rallies and drop, base, drops. They're just not normally quite as reliable as a drop-based rally or a rally-based drop. Okay. And then for supply, it's exactly the opposite. So here we go. So for supply, you take the first green candle after the drop. There's the drop. Here's the first green candle. And you take the bottom of the body of that first green candle and the top, the highest point of the base. You see that? Bottom of the first green candle, highest point of the base. Where's the base? Right here. Drop, base, drop. So there's the zone. And as you can see, it kind of got touched here, sold away, came up, got hit again, sold away. Now you notice the second time it touched, it didn't sell away as far, right? So here's the first touch. And look, okay, it actually sold away a much bigger distance. This was 107.56 down to 106.74. So that's 26 plus, what did I say this was? 26 plus 56 is what, 82, right? 82 pips on this first touch. Then when it touched here, it sold low of 108.08, high of 160. Wait a minute. Low of 107.08, and this is 160. So this was 52 pips. Okay, not quite as big a move as the first touch. All right, then we come over here, and again, to draw the zone, we go back. Here's where it left. Here's where it left the area. We find the first red candle, top of the red candle to the lowest point of the base, and we draw it across. Does that make sense to everybody? And we'll go over these. Okay, just reading your comments to make sure. All right, let's go back and look, see where we're at on the market. Okay, my alert went off. The market is trying to push higher. Okay, next level above would be 24.4750. We have less than 6 minutes to go on this opening candle. Okay, GDX is rising again, so if I go back over here, I'm probably going to be in the red. I'm only $4 in the red. Okay, so I went from up 22 to down $4. But I'm not in a hurry. Again, I've got till Friday on that if I need it. Nice. I see we have 6 people joining now, which means almost everybody that's in the premium room, as there's, I believe, 8 of you. Okay, still going higher. Okay, is this to be expected? Maybe, right? So what did we do yesterday? Yesterday we came down here to the trend line, and then we obviously went up. Here was yesterday. Then overnight, what did we do? We sold off, clear down to here. Then we even gapped down. All right, so what does our common sense tell us? What are they most likely to do in the morning, right? Everybody sees this overnight and thinks, oh, doom and gloom, and they still may go lower, but what are they doing at open? They take price up, right? I saw a bunch of people on Twitter, oh, I'm so glad I bought those puts before close yesterday. I'm so glad I'm short. I'm so glad this. I'm so glad that. Well, then this happens in the morning, and what do you think all those people do? Right? Don't they freak out and they either get stopped out or they're looking to sell immediately? Okay, so big money gets them out of the way in case they do want to turn it back around later in the day and take it lower. Okay, Al, you're asking me what was my rationale for the GDX trade. Okay, I kind of figured we were going to sell off overnight, which we did, and it did gap down. Okay, let me show you. Okay, so here's GDX. Here's where it ended yesterday, up here, which was sort of forming a double top too, right? You see that? Okay, and then we gapped down. It flushed down to this support level. Now, obviously, I am hoping that it'll get below here, hold, maybe even retest, and then go lower. That's what I'm looking for. And I have until Friday for that to happen. I would love to see it happen today, but that's my rationale. Okay, so my rationale was at the end of the day yesterday, and I bought here at the end of the day. It looked like we were forming a double top. So let me draw it across here. Whoop. Sorry about that. Got to change my tool. All right. Okay, looked like we were forming a double top. Plus, I anticipated, because everything was up yesterday, that overnight we would probably see a sell-off in the market, which we did. And then we got our gap down. All right, so we went from here down to here. But at this present moment, the market's going up, right? Which that's also to be expected. I'm in no rush. I'm not in a hurry. Again, if I come back over here, I'm only down $8, right? See that right there? That's my profit and loss right there. I'm only down $8. So I'm not concerned. And if, later in the morning, later in the day, this turns around and starts heading lower, then I'll probably be in good shape. Okay, for whatever reason, and it is abnormal. Let me go back to GDX. Hang on a second. That should be, for some reason, it's sloping up. There we go. Should be like that. For whatever reason, GDX, gold in general, has been following the market when typically it's inverse to the market. So typically if the market's going down, gold is going up, or vice versa. But recently, in this market correction, gold has been following the market. So if the market's down, gold's down. If the market's up, gold's up, so on and so forth. Okay. I see your response. Good. All right. Now that was a speculation play on my part. That's why I didn't put it in the room. I wasn't trying to drag anybody into a speculation trade, right? I'm just speculating that may be what occurs. So again, before we get off here, what I'm looking for is I want to see this come down. See where it caught support was at the 20 this morning. It flushed down. Okay, but I want to see it come down, break below this support level at 23.56, hold, and then go lower. Either retest and go lower. Anything like that. I don't care. It could flush if it wants, but if it came down, got below here, retested and went lower, that'd be good for me. Okay, so that's what I'm looking for. But we'll just we'll keep our eyes. I'll set an alert. Let me put an alert just below here. If it goes off, I'll know price is moving in my direction. There we go. Okay, so if that alert would go off, I could come back over and check it out and know what's going on. All right, let's look at some other things. Yeah, Todd Father, exactly. How it bounced off the 20. Yep. We were talking about it on YouTube yesterday, right? On the YouTube live stream about how even though the 20 is a short-term moving average, like look right here on Tesla. Look how it's being respected on this move down. Every time it gets up to it, comes down. Gets up to it, comes down. Gets up to it, comes down. All right, so Tesla gap down. So here's where it ended yesterday. Gap down right in the middle. And as you can see, it went both directions already on that opening candle. Okay, it's been up to this resistance level. It's been down basically to the support level, and it's still right in between. But we're at 397, 398. And what I was saying yesterday, let's go look at a higher time frame. I think it was my wife I was having this conversation with just a couple days ago. But I was talking to her about the irony of what would happen or what could happen. This was a couple days ago, that literally in 2 months we went up $600, which is not sustainable. It's just not sustainable. Okay, and from here on up, that's almost a 90-degree move up. We fell back down here. I did make some money there, and then I stopped trading Tesla after this drop. Then we got euphoric buyers that tried to push it up. But as I warned a lot of folks, let me scroll in a little bit. I warned a lot of folks about this wick right here. I said, if we get back up there again, watch out, we could sell off. And we got up to that wick. And now what's happened in 1 month's time? Okay, this was February 19th, and today is what, the 18th, right? Yep. So in 1 month's time, we went from here, which was a high of 944, down to a low of 381. And that's what I was telling my wife. Wouldn't it be ironic if as quickly as we climbed, we lost that same amount and got back down into the 300s. That's exactly what happened. Because we went from basically the 330s up to 968.99 in 2 months, okay, over $600. Now we have fallen in a month, because you usually fall faster than you rise. We've fallen about $600 in 1 month. So this is Tesla. But that's why I was warning everybody up here when we got back up to this wick. I said on the live stream yesterday that it was a sucker's bet, right? People that were thinking that we were just going to continue and break through here and go higher. I just felt like that was, they were putting themselves in jeopardy. And then those longs, what happened up here, they got trapped. And really, we can talk about that for a second. Why did we have such a big rise? It's because shorts got trapped. I don't know if you guys remember, but before this big rise, Tesla had some of the highest short percentage, meaning people who were short on Tesla, of any stock in the market. If I remember right, at one time they were either number 1 or number 2 of highest percentage of shorts. Okay? So, what does that mean? Well, if price starts to rise quickly, the shorts get trapped, they have no other choice than to unload their positions. Well, when they unload their positions, what does that do? That's what creates this. Okay, that's what creates this. All the shorts bailing out at the same time creates this chaotic move to the upside. So when they were back down in here, they had one of the largest concentrations of shorts of any name in the market. It was either number 1 or number 2 at the time, and that's what created this. All right? Vice versa, when they get up here, what happened? Everybody, even with this drop, a lot of people thought this was just like profit taking. That's a pretty big drop, right? Okay, so they went from 968 all the way down to 705 in basically one day. $268 in one day, almost 260, let's say. Okay, is that normal? No, that's not normal. That's not normal profit taking. All right, but people were still euphoric. Then they got these green candles and people started to buy again. Everybody was talking about going to 1,000 to 1,100. You see this move up here. Then they get up here into this wick where we know there was aggressive sellers. That's why I said be careful up here. They get up here and then the longs get trapped. It's exactly the opposite, and then that's what creates this. Okay? There was a flip where they were heavily short to heavily long, and that's what creates this sell-off. Okay, just making sure I'm looking at your comments. Let's go back. Let's look at shop while we're right here. All right, so shop, that was on our watch list the other day, right? For trade ideas, out of this, we got about a $40 bounce. Okay, yesterday we gapped down and then it's come back up. So let's go to the 30-minute. Okay, here we are on the 30-minute. We gapped down. We're going higher. You see this number is climbing, right? We started off at like 108, 109. We're up to 272. Still extremely low, but that's because of all the gap downs that haven't filled yet. All right, they've almost filled their gap. If they get up to here, they filled the gap, and they're going to be there pretty quickly. Let's squeeze it in, and we're going to see how far it's moved already. Opened at 325 and they're already at 353, so they're already up almost $20. Here was the bounce in demand the other day. Excuse me, this was the first one right here. Okay, this was about a $40 move. Then it came back over and it bounced in demand again. Okay, so we did catch a second bounce. That doesn't always happen. This was the first. This is where I alerted it. When remember price was over here and I put it in our trade ideas and we got down in here in the trade ideas, I said we're looking for here or here and then catching a bounce. Okay, that would have been a beautiful play for somebody right there, that bounce. Okay, so that's shop. Let's go back and look at the market. I think it's still climbing. All right, so we're up here testing the 2447.50 level. All right, and we have a little less than 22 minutes on this candle. All right, so we're going to see, okay, right now it's kind of pulling back a little bit. Kind of pulling back a little bit. Now, is this a supply zone right here? This is a little bit tricky, and I'll show you why. All right, did we move away from the level in a strong fashion? Well, it's sort of when you're comparing it to, say, like over here, right? Or over here. All right, that's a strong move. And if we would have drew across, you'll notice, right? Okay, if we would have drew that across, that's exactly what happened. We came up here and then we sold off, right? So this was supply over here. All right, would have went as high as right there. So we came right up into the supply zone and then sold off. But let's come back over here and take a closer look. All right, now we know now that we had this gap down, all right, which makes it a strong move away. So if we were going to draw this in, we'd have a big zone, wouldn't we? I'll show you. It would be from here all the way up to here and across. All right, and that would be pink. Let me change it. All right, so if, and I'm a little bit, I'm on the fence. I mean, it looks like it could be. And again, we know in hindsight because of this big gap down. Now remember, we went limit down right here. If we wouldn't have went limit down, how far would price have fallen overnight? We don't know. That's why they put those protections in place. I mean, price just could have like plunged. Okay, so we don't know that. All we know is what we see. All right, but if you were thinking, that's strong enough for me, okay, if you're thinking that, then this is how you would draw that supply zone. Now, we're in it right now. If price starts to turn around and move down, okay, we'll know, yes, that definitely was a supply zone. So we'll leave it there for now and we'll see what happens. Okay, does that make sense to everybody? If you're going to draw that in, that's how you would draw it in. And that's a big zone, but that's how you would draw it in, right? Okay. I'm just saying that, again, we know in hindsight that this is a big drop, but we wouldn't have known it at the time. What you like to see is like these first couple candles being, maybe not quite this big, but maybe, twice as big as that. Leaving, another big candle leaving, and then if they get smaller, that's okay. This is decent and this is decent, but then you see how it immediately started to slow down. And again, we don't know. Would this candle have sold off and really plunged without the limit down protection? We'll never know, right? We'll never know. All right, so we'll keep our eyes on this. I'll set an alert up here. That way we can go and look at other things, and if price gets back up there, it'll let us know. And then if price starts to fall, let me do this. Okay, if price would start to fall, especially if it's the next candle, there could be a scalping opportunity setting up. Okay, all right. Let's see. Let's go look at Euro USD, because I know that's something that Grayson likes to play. Euro USD. This, just so you guys know, Euro USD is the most heavily traded anything in the entire world. Okay, this currency pair is traded more than anything in the world. Okay, If you think about it, it sort of makes sense. You have the dollar, which is the primary world currency, and the euro, which, the Japanese yen, the euro are probably the next two. But when you pair the euro and the dollar, that's why everybody is always so invested in trading it. All right. So you can see we've created some supply up here. I have an alert set. We came down, we based, we went higher. That's a pretty decent move. That's why I went ahead and drew this in. And as you can see, we came back, and when we tested it, what did we do? We bounced, right? You see this right here? Okay, I really need to take this and now bring it back. Where's my low point? My low point is right about there. This wick here is the low point. Okay, so we had this little minor test. When you see it come back that quickly, that's typically not your first retest. This would be your first retest. Once it kind of moved away, came back, and then you can see the bounce. All right, so that was 985 to 44, 15 on 44 is what, 59, right? Okay, so that was a 59 pip bounce on our first retest, our first real retest of demand. Then it came back down in, it held a second time. You can see the second bounce, not as big as the first one, and then it sold off. Okay, see that? Now, have we created any new supply? All right, there's a possibility right here, because what do we have? We have a rally, base, drop. All right, so I'll draw this in. And we know what we're doing. We come from here up to the highest point of the base, and then we draw it across. And just like with support and resistance, you don't have to be exact. As long as you're within a couple of pennies, you're in good shape. Okay, I'll now make this pink. Okay, and now we have supply. So if we start to head back up, and then we would set our alert right here. Let me see, 10995. So I would set it just below that. Create alert. I would set it right here, and then I put a note. If this alert goes off, look to go short. That's all I do. All right, then there it is. There's my alert. If price reverses and comes back up into here, triggers that alert, I would know. Look to get short right there. My stop would be placed just above the zone. So if it continues up and goes through there, then you don't want to be in the trade, right? That's where your stop would go. As you can see, most of the time, the very first time it bounces, it doesn't penetrate very deep, does it? It usually just barely gets in, and then it bounces. Okay, the second time is when it got really deep into the zone. And even at that, now I probably wouldn't take the trade the second time. I wouldn't take it until it was leaving, going this direction, leaving the zone. Okay, but even if you got in somewhere in here and put your stop just below, you would have been fine, right? It never left the zone. If it did, you wouldn't want to be in the trade anyway. Okay, then it came up, sold off, which is creating our new supply zone right here. Does everybody see that? Okay, let's look at some other things. Let's go ahead, let's look at Amazon. All right. So Amazon, right here was our first test. You see this? Let me, I'll stretch it out. Okay, right here was our first test of this supply zone, which wasn't that strong. This is 30-minute for one thing, and I'm going to tell you why it's not that strong. You notice how this is just sort of a gradual decline? Now, even though we left The reason I drew it in, you see how a gap is the strongest way you can leave a zone. All right, so even though we left strong, you see we didn't really have a nice drop, base, drop. Okay, that would have been, it would have been much better to see it go like this. Down, over, down. This gradual drop like this, even though we have this big drop away, that tells you this is probably not the strongest zone, but I did draw it in because of this big drop away. And you can see right here on our first test, we did bounce back down to the trend line. So let's just see what it was. 1811.40, and it went down to 1786. Okay, so that's, I mean, compared to some of these big candles, that's not huge, but 1811 to 1786 would have been 14 and 11, 25. $25. All right, then it came back up, broke through the top of the zone. So for me, even though it did end up pulling back here, you see this? Even though this occurred, I wouldn't have been interested anymore. Once it's broke and closed above there, I'm not interested. Then you wait for your next best setup. Okay, that's Amazon. And here's your levels on Amazon. So today we gapped down and we've been going up. Now I see advancers have sort of stalled out in the low 200s. Okay, so that's kind of where we're at right now. All right, let's look at BA. BA continues to drop. It's dropped clear out of where I have things marked. I'll draw in some additional lines. Okay, so 1, 2, 3, 4, 5. The last 6 days on BA, look at this. Just moving down. Okay, we got down to 98, under $100. Let me go ahead and draw the lines in for you, and we'll see if we need to adjust anything. 4 hour. Go to your line chart. Go to current price. Here's current price, and now we start drawing them in. Anywhere there's a big move or a sharp pivot, I'm going to remove this one. I'm going to remove this one. Okay. I'm going to remove this. Just cleaning this up a little bit. I'm going to remove this one. And I'm going to remove this. Okay, so for now, there's our levels if it would start to head back up, which we don't know if it's going to. Now, if we need to draw in levels below, I need to go out to a higher time frame because the 4 hour didn't go back far enough. And I've got to come clear back over this way, going way back, right? Okay, so here's current price. I've got to come clear back over here, and I need to be below current price, which is this red number up here, to draw in lines. Okay, I would draw right here. And maybe right here. Draw a few of these in for you. And one more, and that'll be enough for now. Okay, where are we at in time? We're back in 2013. That's how far we had to come back. That's how far we had to come back to find levels. That just shows you, the strength that Boeing's had for years and years and years, and now because of all this turmoil, you see where it's at. Let's squeeze in here. Let me do it like this. And I'll get it to where you guys can see it. All right, so that's where we're at. Now, these levels down here are going to be closer together, and why is that? Because way back in 2013, price wasn't moving in these big ranges, okay? Back in 2013, you didn't see moves like this. So that's why these levels are so much closer together than these. Okay, and I would probably add a level up here, right here. Okay, you see why I added that? Obviously, this is a resistance level here, plus we have the gap from here to here. All right, so I just added that in. So occasionally when you go back to the time frame that you trade, you'll notice things like this. You'll notice this gap. You'll notice this resistance area right here. And just add it. Just add it in. All right, let's go back and look at ES to see what's going on. Oh, okay. So far, right? So far, this is acting as supply. And we are less than 6 minutes away. So if we would end up as a hammer, we all know what to do, right? Everybody in the premium room should know what to do. If it ends up as a hammer or as a doji with a long topping tail, then we would look to see, does the bottom, let's just say the candle ended just the way it is right now. If it ended this way, then we would be looking to go short. If the bottom of this candle would get taken out, you would put your stop wherever you're comfortable. I would make it fairly tight, and then we would look for price to start moving down at that point. Okay, and we would look for a scalp. If that occurred, if we got under this and held it, there's really nothing to stop us all the way back down to opening price, right? Okay, so there could be a significant opportunity. That's if it ends up that way. Obviously, in 5 minutes, this thing could go green. It could start to flush. It can do a lot of things. I'm just showing you hypotheticals. Okay, so we're going to keep our eyes on this. We know that in about 4.5 minutes, this candle's going to close. So far, this has acted as supply. Right? We've went up into it. We have not pierced out of the top. It pushed price back down. I mean, we do know there were sellers up here. Again, I would like to see that be, candle like this or like this. This one here leaving the area. That tells you for sure that's a supply zone. This is one of those ones where, you can draw it in and then just kind of see. Now, I wouldn't take it. That's what I'm trying to explain to you. I would not take this up in here because I'm not as confident about the zone. But I would take it, if this formed a shooting star, I would take it underneath, heading the other direction. Okay, here's a place I would wait for a candle confirmation, price action confirmation. If I was very secure about this being a supply zone, like if it was this type of candle here instead of this, leaving this area, okay, I would have probably entered as soon as it got up into the zone and then placed your stop up here or wherever. I mean, again, you can place it wherever. Let me give you a bit of advice. On ES, I would not place my stop clear up here. Okay, if I entered, like let's say here, let's say this candle didn't exist. If I entered here and price started to bounce out of there, I would have a tight stop. And why? Because we know these candles can occur, these great big candles. And I would not want price to just start going the other direction and kind of trap me or get me in trouble. All right, so ES, because of the extreme volatility, I would be very careful. All right, so we know we've got about 2 minutes to go. We'll look at something else and then we'll come back. Let's see here. Let's look at Google just real fast. Then we'll go back to the market. Okay, here's Google, gap down, so it closed here yesterday, gap down, and has been moving up. Okay, as of right now, it's not showing the same weakness that the market is, right? So the market went up and then has been selling back down. Google is still showing strength right now. Okay, so you would keep that in mind if you're somebody who likes to trade Google. Let's look at IWM. This is the small cap ETF. Okay, it's doing similar to what the market's doing, right? Went up, got up here, and now it's selling back down. JNUG. Okay, JNUG has been brutal the last few days. Okay, look at this huge drop from $67. It got all the way down to $3.50. That's incredible. And this is a gold name. JNUG is a gold ETF. All right, then yesterday it got back up to 13 something, right? And then here's where it's at currently. It's at 1243. All right, so that's JNUG. Microsoft, and then we'll go back to the market. Okay, here's Microsoft. Look how it ended the other day. That was the day the market spiked at the end. It just drug a lot of names right up with it. But then what did it do? Huge gap down the next day. Up, down, up, down, up. Gap down, went up. It's doing just what the market's doing, right? You see that? It went up, spiked up, and then it sold back down. This will probably be a shooting star. We only got about 10 seconds to go. Back over to the market. Okay, see, it's trying to push back up here. Okay, so that's not truly a shooting star, right? This wick is not 2 to 3 times bigger than the body. But we do see, right, push back here, push back here. We may be in a supply zone. Okay, again, this is not my favorite, but I just drew it in just so you guys could see how you would draw it in. Let me stretch this back out a little bit. Now we'll see, again, I already have this alert set here. The only way I would be looking to enter a trade right now is if this got taken out right here. If this gets taken out up here, only thing that concerns me a little bit is there could be a little resistance right in through here. Okay, could be. Again, it's not the best. Okay, it's actually a little bit stronger than this though. Okay, see these 3 candles leaving this area right here. So what did we have? We had a drop. That would be your base. Okay, and then a drop again. Okay, so there could be some resistance if you had a little zone drawn right across there. Okay, so if we took out the top of this wick, okay, there wouldn't be that much more room until you got right up to here. That's why I wouldn't be as excited about this as if this got taken out. If it started to drop down and took this out, once you get under this support area, 2406.25, as you can see, there's just nothing over here to stop you from dropping unless buyers just all of a sudden came in, which can happen, right? Don't ever discount that. I mean, when you look at something like this, you know, probably 7 out of 10 times, once it gets down below the 20 in this level here, it's probably just going to fade right on down there because there's nothing over here. But, you know, 25-30% of the time, there's the possibility that buyers could step in, right? You know, especially if an institution or somebody that had a lot of money just decided, you know what, I don't want it going down. I want it going back up. They could step in at any time. But the probability is that it would just, if it got below these 2 here, it would just continue to flush down, you know, at least to opening price level. All right, let's look at GBP USD. I haven't looked at that in a while. Okay, GBP USD continuing to fade. Man, this thing has been in a long-term downtrend. All right, this is just the 30-minute chart. Let's go to the 4-hour. Look at this. Look at that. Okay, GBP USD. This is the pound dollar. Okay, some people call it the cable. It's just a nickname for it. When it hit this supply up here, Just look how it's just been selling off. Okay, it's created some nice supply zones. If it ever does start heading back up, there's going to be some nice supply zones. Like here's one that I haven't even drawn in yet. Let's go ahead. Let me go back to the 30-minute to try to draw this in. Okay, but I just wanted to show you. Look at that. That's massive, even for a currency pair. And look at the climb up, how small the candles are on the climb up, but then look how big they are on the fall. Yeah, a lot of money. Obviously, this is what I was trading last week when I was making all of those pips. Remember, I made 451 pips in 2 days on Thursday and Friday. 451 pips, and it was on this. And you can see why. Look at these big drops, right? All you got to do is catch any of these, right? I didn't catch them all, and I still made 451 pips in 2 days. I made way more than that over the week, but just in 2 days, that's like, again, a professional Forex trader who's a swing trader, he'd love to make that in a week. Now, these guys are smart. They're making the same kind of things that I am right now, because they're identifying these opportunities as well. But if you're a professional Forex trader, for a week, you'd love 250 to 500 pips, for 5, 6, 7 trading days. And to get 451 in 2 days, I was ecstatic. Okay, but you can see how. It's just because of these huge drops. All right, so we're going to go back to the 30-minute. And then we're going to scroll in. All right. And let's see where I like it. Okay, I like this area right here. Okay, I like this area right here. So let me draw it in. Okay, go back to your first green candle, okay, that precedes the drop. We're going to go from the base, the bottom, to the highest point of the base, So let me scroll this across. Say the highest point of the base is right there. Again, all you need to do is be close. You don't have to be exact. I mean, you can get exact, and I'll show you how, but as long as you're close, you're fine. I always make it pink. That tells me it's supply. All right, so how can you be exact? It's simple, right? So you just come over here, you see what's the lowest point, or excuse me, where did this candle open? 1.1986. It'll tell you right up there, right up here, okay? 1.1986. So I'm close, I can change it. All you do is edit properties. 1.986. All right, so now I've got it exact on the bottom, and then for your top, what was the highest point? 1.2043, and that's sort of where I'm at. I'm close. I'll just change it just for the, normally I wouldn't even probably bother as long as I was close. Okay, now it's exact, but that's how you would do it if you want it to be exact. But if you're within a couple of pennies, you're in good shape. All right, so you guys see why I did that? We had a drop, base, big drop away, big candle away, and you can see the move came all the way down to here. Okay, so that tells us that right in here, there was more aggressive sellers. Okay, Sonny, that's a good question. Textbook, and I'm just going to give you the textbook definition. Textbook says that when you're basing, especially if you're on a lower time frame, and I'm going to say 15, 10 minute, 5 minute, something in there, they typically want you to have at least 3 to 6. You don't want to have, on a lower time frame, you wouldn't probably want just one candle. Now, if it's a big sharp pivot with a wick, then you would use the wick. That's one of the exceptions. And if I find one of those zones, I'll show it to everybody. But Textbook says, let's just say we're going to draw supply. You want a rally, a base, and then a drop, and that creates your strongest supply zones. Okay, you'd like to see 3 to 6 candles in there if you're on a shorter time frame. Now, when you start talking about the 30-minute, the 1 hour, the 4 hour, again, 3 to 6 is fine. You don't want to really go more than that in most cases. But you might not have as many, 1 or 2 or 3 is plenty, because think about it. If you have a 4-hour time frame and it's got 1 candle and a base, how many 30-minute candles is that? Right? It'd be 8. It'd be 8 30-minute candles. Okay, so you want to think about it in terms like that, but it depends on what time frame you're playing. So for me here, right, what do we have? This is a 4 candle base. 1, 2, 3, 4. Perfect, right? Okay, but I'd be fine if it was just a couple. If we have this strong move away, and see how we came into it, see how we had this nice strong drop down to it, that's what I like to see. Strong drop into it, base, strong drop away. That's when I'll go ahead and draw these in on a drop, base, drop. But the best zones come from like a rally, base, drop, or a drop, base, rally. Those are your best. And why are they your best? Just again, think about it logically. Momentum was moving down, and all of a sudden it stopped. That's your base, and then it shoots away. That tells you without a shadow of a doubt that there was a change in buyer sentiment on a large scale, meaning institutional buyers. Institutional buyers are the only ones that are going to stop and change it like that. So again, if you have a drop, then a base, then a strong rally away, you know without a shadow of a doubt that sentiment changed right in that base. Okay, and then it shoots away. Same thing if you're doing demand. If you had a drop, a base, and then a rally back up, or a rally, base, and then drop back down, either way, those are your best. Those are your best. Okay, so hopefully that answers your question there. Let's go back and let's see what the market is doing. Okay, right now, not doing a whole lot. It's inside, right? Inside candle, you guys know what that means. It means we're fully contained in the candle before it. So again, nothing to do unless we take this out or you take this out. And again, I'm not as excited about this right now as I would be this. Okay, so right now we're just sort of, not doing a whole lot. Okay, just making sure nobody else has any questions right now. We'll go a little bit longer. Most of these mornings we're going to go to at least 10:45, 11 a.m. and then I'll wrap it up. Let's see. Oh, we'll take a look at some more Forex. Let's look at GBP, JPY. Okay. Now here, look at this. Price dropped so strong it went right through the demand zone. Let me come in. Okay. So again, this is why if you do not see, remind me we're going to go to Zoom here in a second because we just had an alert go off. If you do not see a bounce, okay, this is probably the first time this was tested. Come way back over. Yeah, probably even have to go to a higher time frame. Let's go to 4 hour. Yep, okay. See that? First time this was tested and it didn't hold. That shows you how strong the selling pressure is right now. See this? This is 4 hour. All right. Now, so far, we are holding just below here in a resistance level. So let me come back over here. Did I not draw my zone correctly? I mean, that's entirely possible. Well, I mean, I feel like I did. Let me show you. Is it possible I should have came down here? I mean, I don't think so. I think this is the base. However, right here, that if I would have drawn it down to here, watch, I'll adjust it just to show you. Okay, if I went there, and then you got to go right here. Okay. Now, if we include that candle as part of the base, which I wasn't. Okay. Now here's where we had our drop, base, rally, right? Drop, base, rally. So if we include this in the base, now let's go over and take a look and see, are we in it? Okay, we are. Okay, we are. I can even go back to the 30-minute. But the one thing I wanted to point out to you, yep, we're still in it, right to the very bottom. Okay, what I wanted to point out to you is if I try to tell you guys, I'm fairly conservative. I wait until I start to see the bounce. Then I enter. Then I place my stop. Okay, when I see this kind of action, I'm waiting for it to stop before I look to enter. Some supply and demand traders, if this is a first touch, as soon as it's touched, they enter, because they don't want to see it touch and then bounce away really fast and then they miss some of that move. I'm conservative, you guys know that, so I wait typically till I start to see a bounce. All right, but if I drew that this way, and again, I don't know if I didn't include it, right? So I wasn't including that one candle as part of the base, but I mean, so far it's held up in here. We'll see if we bounce away. Okay, we can always come back. Okay, let's go look at Zoom, because I just had an alert go off. All right, there we go. Okay, Zoom just came into supply, and what is it doing? It's immediately backing off. You see this? That's why I had the alert set. All right, oh, perfect. This is what I wanted to show you. Okay, so we're on the 30-minute. We have a strong rally, one candle base, and a strong drop away. Where do you draw your zone? From the bottom of this. If this was a doji, you would draw it wherever the doji line is, but the bottom of the body all the way to the top of the wick. Okay, you see this? This is exactly what I wanted to show you. All right, so that's how you draw that supply zone, and look at this. Okay, Zoom came right up to it. It's touched it. It's been bouncing away. So far, 117.76, 116.10. All right, so far, that's already $1.50, $1.60 that it's bounced. That fast. Yeah, Todd Father. Todd Father was all over it. I just now saw your comment, Todd Father. Yeah, you were all over it. Okay, but you see, this is what I really wanted to show you before, and I said we'll probably come across an example, and here you go. Strong rally, one candle base, and then strong drop. So this is your rally, base, drop. And this is how you would draw it. You would draw it from here to the top of that wick and across. Okay, that's how it works. So we got to see that. So that's Zoom. And we'll come back and check on Zoom here after a bit. Let's see what Roku's doing today. Okay, Roku is still in no man's land. You notice I've got my demand zone and my supply zone. I'm not really excited, to do anything unless one of those alerts goes off. Can you just, if you're somebody who likes to trade Roku, you can trade it just off of support and resistance. You can trade it off of price action. Right? Okay, so for somebody who may not understand what we mean by price action, here's where we open. We went up. Then we formed an inside spinning top, which is a candle of indecision. So then what would we be looking for from a price action perspective? We either are looking for this to get taken out or this to get taken out. The bottom has been taken out. So if you're trading price action, you could have entered 1 penny below here, and your target one would be this zone, right? Excuse me, this support level at 64.95 or slightly before. I would be slightly before that. Okay, now you got to get under the 20, right? The 20 can act as resistance, but if you get under the 20, there's nothing over here that should stop it from getting down to at least right around here. Okay, that's price action. That's how you trade price action. You wouldn't have to have, really, in theory, you wouldn't have to have anything else on the chart, and you would know, like if you didn't even have this line here, you would know your first target would be the open of this candle. Okay, that's how you would trade what they call pure price action. Pure price action means you don't use anything else. I combine price action with support and resistance and supply and demand. All right, but that's how that works. So if me personally, I don't trade Roku that much. I would be waiting. That's why I have the alert set for it to get into demand or to get into supply and then look for a bounce. Right? So let's just say it was up here. If it got into supply, I'd probably be looking for it to bounce at least back down to here. And that'd be about a $10 move. See that? Unless there was demand created before that, and we wouldn't know that until the candles got up there. Same thing down here. If it bounced, okay, you're at least looking for it to get here and maybe even all the way up to here. Which again, if it got all the way up to here, would be approximately a $10 move. And on Roku, that's good money, right? It's really good money. Let's see. Let's go back to Tesla, just see what's happening there. Not much. Not much. Okay, if I even get a little bit closer. Okay, here's where it opened, went up. Imagine that. Look at this. Stopped right at resistance both times. I love it. I absolutely love it when other traders or even either other trading services or whatever. I was watching a video the other day, and I somewhat respect the guy. It's not somebody I follow. I just happened across his videos. And what drew me to it is I wanted to see what he said because like the title might have been something like why support and resistance doesn't work. Okay, and so part of his video, he's going through kind of bashing support and resistance. And then the rest of his video, he's trying to promote what he believes in. Okay, you tell me that it doesn't work. Look at that. Right? We know. I mean, we already know that it works. Okay, but these folks who say it doesn't work, they're wanting to focus on what they believe in or what they want you to buy or whatever, but we know it works. Look, twice it's been up to test this level, right? And reject it off. Okay, so I just had the alert go off on ES. So let's see. Okay, there we go. We just took out the bottom, right? And what did we say? Right here is the first thing. We got to get through this level. Okay, if we get through here, then there's just nothing there unless buyers would step in. If we can break and hold here, I wouldn't even care if you broke, came back up, retested, and then went lower. But this is the key right now. So if you're looking for a scalp, you would have entered right there. Put your stop up here somewhere tight, and now you're looking for whatever you're comfortable with. Let's put it that way. Okay, maybe it's 50% of this candle. Okay, maybe it is all the way back down to opening price level. All right, but we have now taken out, we were inside, and what did we say? We're looking to take out one side or the other. And I told you, I'm more excited if it was going to the downside. Okay, so we took this out. And again, the only reason I say more excited is there's less resistance or support down here. If we're going this direction, right, if we're going this way, right up here, right up around there, I would be looking for it to have some resistance. Okay, so let's see if we can break through here, and if we do, if we can get that fade back down here. That may not happen on one candle. It may take a couple of candles, right? It may, because we have confluence here of the 20 and the support at 2406.25, we may not be able to get through it. Okay, we're just going to have to see. Advancers still in the low 200s. It got up around 230. Now it's back down to 210, 211, right in there. Okay, so we're just kind of watching this. We'll watch it for just a minute or so, and then if it doesn't start moving, I can always set alerts and we can go look at other things. It's trying to get below it now, as you can see. Trying to get below. But these are the kind of setups that we love, right? These are the kind of setups that you train your eye for, that when you see them happening in real time, you know what to do, right? Are they going to work out every time? No. Are they going to work out a high probability at a time? Yes. And what do? You protect yourself. Okay, somebody I was watching the other day, and it is somebody that I like. He's a supply and demand trader. Somebody, he was doing like a live, and this is recorded, it was from years and years ago. He was doing this live stream, and like somebody was sort of being a contrarian, and they were like, well, I've went back and I've looked at your trades and you only win about half the time. And he's like, I'm surprised it's that high. And, you know, obviously that's not the response you're thinking he's going to give. And he said, he goes, I don't really care what my winning percentage is. He goes, all I care about is profit. And he said, if you go back and look at all these trades that you claim you're looking at, he goes, you're going to notice when I'm right, which you're saying is about half the time, I'm making 4 to 1, 5 to 1, 10 to 1 profit. When I lose, I'm losing that 1, whatever that is, right? Because obviously this guy's a bigger time trader, and he's taking bigger trades than most of us. In fact, I was looking at one of the trades he took, and it was pretty profitable. He made I don't know, it was like $5,000 in like 40 minutes. It was on 7 contracts, and it was in Forex. So he took 7 standard lots, I should say, 7 standard lots, which that's a lot of money. You got to have a lot of money to take 7 standard lots, but he made like $5,000 in 40 minutes, right? So like his whole point is if one of those trades goes against him, maybe he loses a couple $100, but when he wins, he's making thousands, right? So he doesn't get caught up in fact, he'll tell you, I don't care about winning percentage. I don't care about it at all. He's like, the only thing I care about is profit. My profit per trade, and you can figure that out, right? You just take the total amount of profit you've gained and you divide it by the total number of trades you've taken. So let's just make a round number, right? If you have made $25,000 on 100 trades, those aren't all winners, right? They can be winners and losers, but if you've made $25,000 on 100 trades, you just divide 100 into 25,000. That tells you your profit per trade. And that's all he concentrates on. That's all he cares about. And so like when trolls are trying to get, say, hey, this methodology, you're only winning like half the time. That's his response. Really? I'm surprised it's that much. I don't care. So anyway, and he is a supply and demand trader, the guy I'm talking about. All right, so here we are. Okay, we're trying to break below here. All right, so already, let's look here. You would have entered at 24.1150. And we've already been down to 23.96. Okay, 24.11.50 is where you would have entered. And now you're just watching to see. And again, if you are in this trade, you make up your own mind where your targets are. Okay, you might be out already, right? You might have made 10 bucks or whatever and said, hey, that's good enough for me. You may be looking at 50% of this candle, or you may be looking all the way down here to opening price level. But so far, you can see this was supply, obviously. Okay, we know it now for sure. Again, I'm just being honest. It wasn't, to me, it wasn't the best, quote unquote, the best supply zone. But, hindsight being 2020, we do know there was a strong move away now because of this gap here. And we don't know. Overnight, if we wouldn't have had that limit down, this thing could have just flushed, which would have made that a strong supply area. Okay, so we're going to see what happens. Let me put, I'll put an alert about halfway down. And if it goes off, we'll know that we're still moving that direction. Let's go back. Okay, Zoom is still about where we left it. All right, there's Zoom. Have we looked at Walmart today? I don't think we have. Here we go. Look at Walmart, man. Okay, market pulling back and Walmart blasting to the moon. Nuts. Okay, up here in the highs. Excuse me. I'm not coughing because I'm sick. I'm coughing because my mouth is dry. Okay, Walmart. Look at these big candles on Walmart every now and again. The only thing is every time we've had one, it's pulled back. But Walmart, despite the weakness in the market, this is what you can look for, right? The few names that are strong when everything else is weak. Well, Walmart's obviously one of those today. Okay, let's go back to Tesla. I think it's not doing anything, because the last time we were here it was at 388 and it's at 387, so it's just sort of languishing right in here. Let's go back to Shop. We'll go through a few names. Okay, Shop went up, sold back down, and so far it's below this area right here, 341.57. Does it make sense, right? Does it make sense where it stopped? It does, right? See this? Okay, rally, one candle base, strong drop away. If I drew the box across here, I'll just do it. Opened at 357.96. You go up to the top of that wick. Make this pink. Just trying to show you how often this stuff plays out. Look at that. Let's go in a little bit closer. Okay, this never got there. You see that? It never got there. So this over here was the first test, and look what it did. Look at this. All the way down here was our gap down. That was the first test, the last candle yesterday. Gapped all the way down here. Okay, here's our next test, and look what we did. Pulled back all the way to here. So what was that? That was 358.56 down to 337.93. So that was almost a $21 bounce out of supply. Okay, USD JPY. We have an alert. So let's go and see what the alert is. USD JPY. Okay, we're getting up into supply, right? So now what am I looking for? I'm looking for a possible bounce back down to demand. Okay, now I'm going to watch it. I'm going to see what it does. This is one I am definitely interested in. So what do we say? USD JPY, right? So I'm going to watch. I'll bring it. I've got it up. Again, I trade Forex on Forex.com. So I'm watching it here. I've got it on my mobile. I'll be looking for a bounce. And we'll see. Okay? But that's all you do. Give me a second here. Okay, so that's all you do is you set your zones, okay, when they're created, then you set alerts, right? So really I should have an alert down here at 107.49 maybe, because you want to be alerted slightly before it gets there. Okay, and I would say look to go long should this alert go off. All right, just like I just had an alert up here that says look to go short if this alert goes off. Okay, so in theory, what I'm looking for is I'm looking for a bounce out of here back down to here. Does it make sense? A bounce out of here back down to here. All right, let me get back, bring you guys back up on the screen. Okay, Al is asking if I can look at a trade that he posted. Oh, hang on a second, Al. I'll do that in just a second. We can stay on a couple extra minutes. Just had an alert on ES. Okay, so now we're about 50% of the way down of this candle. You see what I said? It might be more than one candle as we move down. So 5 minutes ago, we just started this new candle. What did we do? Look at this. Break, retest, and going lower. One of my favorite patterns, right? Break, retest, going lower. Okay, so now I'm going to set an alert down here. Let me see, create alert. Okay, actually, yeah, there we go. I think yep. Okay, beautiful. Okay, so if we make it all the way down here before we get off, that alert will go off. But this trade is working out beautifully right now. And okay, let me go back. You said in the premium. Premium chat. Does it meet your criteria? Does this make sense? All right. Okay, Al, I don't know what the name of this is right now. Which name or which symbol is this so I can pull it up on my chart? I see you've got a trend line. You had a trend line break. Looks like possibly you might have had a retest there. Can you give me the name? If you can give me the name on that, I will go look at it. Give me the symbol. So if you can type the symbol or the name or the currency pair or whatever it is into comments, I'll bring it up and I'll take a look at it on my charts there. It's easier for me to analyze it on my own charts. So I'll just, okay, Euro JPY, okay. Well, let's go over and take a look. Euro JPY. All right, so here we go, Al. This is my 30-minute chart. And let me take a couple of quick looks here. Trying to see if there's anything that catches my eye. Okay, basically, I'm on a 30-minute here. Okay, basically you can see we had price spike up here and right off of our resistance level there at 118.40. Let me widen this out. Okay, so a very good potential trade would have been to enter below this is a perfect shooting star. This is exactly what you want. Look at this. Strong move up. Because at one time, this was a big green candle. This would have been like this candle over here at one time. Big green candle, hits resistance, shoots back down, forms a perfect shooting star. That's a wick that's about 3 times the size of the body. Okay, you would have entered just below here, you know, just a pip or two below here. Your stop, for me, I probably would have put it up here just above the 200. Okay, you would put your stop anywhere. You might have put it up here. You could have put it wherever. Okay, and then look at the sell-off. Look at the sell-off, right? Once you cleared this, your next target down here, and really once you cleared this wick, okay, your next target is probably right here, 117.29. All right, so that's how I would have been looking at this, right? Okay, now I've got my supply marked up here. We bounced out of demand right there. We didn't get all the way up there. Okay, so this is fresh until we hit it, and that could be days from now. That could be a week or two from now. Okay, but for me, the best trading opportunity I see is this shooting star. And again, I'm trying to walk all of you through this from a common sense perspective. Okay, here's our low point, strong move up, right? Because from here to here, that's a strong move up. And remember, you only see this now in hindsight. Let's put it all the way back over here. Okay, this is what you would have seen before that candle. Then I'll scroll over. The next time you see it, it would have looked like this at one point. See this big green candle right here? Okay, so imagine when we go here, here's the next candle. Before it turned into this, it looked like this. Okay, so strong move up right into resistance. Now, no matter what time frame you're trading on, for me it's the 30-minute, so then I have to let this candle close, right? I wouldn't have wanted to go long there, right? Because the candle wouldn't have closed, because look how it closed. It closed as the that is a perfect shooting star. That's what I look for. I mean, that is exactly what I look for. So you would then, as you go to the next candle, let me move it over. I only want one to show. Trying, guys. There we go. Okay. The next candle started to move up. Then it reversed and it took out the bottom here. That's where you would have looked to enter. Okay, and then you start setting your targets. My first target would have been this wick. Okay, that would have been my T1. Then if you clear that, your second target could be 117.29, which is also, see that wick bounced off of there? See this wick? Okay, so slightly before that would be a T2, and then you can see how it played out. See that? Okay, now look at this. If you draw that across there, look, it did bounce. You guys see this? Okay, you see that? And it bounced back up here. Then it continued on down. So that would have been T1, and then this could be your T2. All right, does that make sense? Okay, Al, I see you saying okay, thanks. All right, so that's what I see. That's what I see. So if you're in this short and you're still in it, probably in a good position there, good shape. I know you had a trend line, and let me squeeze this up. Okay. So you had a trend line basically running up across here. I'll just draw it in for a second, and I'm not even trying to be exact. Okay, you had a trend line, something like that, and then you saw the break of the trend line. If we squeeze it in, yep, we had the retest, right? Break, retest, and lower. All right, so that's what you had on your screen. I personally, again, there's nothing wrong with that, okay? But here's where you could have caught a lot of move right there. There's your shooting star. Off of resistance after a strong move up, enter here, take it down. Here's your T1. Down here, right before here, here's your T2. You're welcome, Al. I hope that helps, and I hope that helps everybody who's watching be able to see that, okay? Again, you don't have to just trade one thing. I don't. I trade them all. I trade price action. This is a support and resistance trade. That's what this is, okay, in combination with price action, and I trade supply and demand, okay? You can trade all of those. You don't have to trade just one thing. And that's kind of what I was, referring to when I talked about that guy. Let's go back over here real quick. Oh my gosh, this trade is working out beautifully. Look at this. Look at this. Wow. Okay, exactly what we look for, right? Take this out, we go short, we have our target in place. Again, you could have maybe just cut this candle in half if you wanted to be ultra conservative, okay? But unless you see price start to reverse against you, there's just nothing here to stop it. There's just nothing there to stop price, unless all of a sudden a bunch of buyers would come in and say, we just don't want it to go lower. But that just doesn't happen that often. The probabilities are that you're just going to continue to go on down. Now, it's starting to go back up. Okay, you just got to watch it. If you're in it, okay, again, if I'm in it and I start seeing this, I'm probably out. I'm just locking it in. Okay, just locking it in. All right, but I've got this alert set. We've already went over, but there's been a lot of good stuff happening here. Let's go back and look at a couple of things before we get off. Okay, so far, a little bit of a bounce. Okay, again, what I'm looking for, and it may even penetrate up in there further, but my alert went off. Okay, we're at a first touch. We're at a first touch of a strong supply zone. Okay, strong move up, one candle base, strong move away. That's what created this. So this should be strong supply. Then we come back over here, very first time we're touching it. So I would expect, the probability is that it'll reverse and head back down to this demand. All right. And let's see here. Tesla is fading just a little bit. Nothing major. It was 387 the last time we were here. See this? Okay, it's down, getting near this support level. It's down to 380 something now. So again, it went up, tested this resistance level twice and has been selling off. You guys will notice advancers are starting to drop again. See what SHOP is doing. Okay. SHOP bounced off of supply, still moving down. Okay, still moving down. I'm not saying it's going to happen today, but I would say maybe in the next day or two, shop will probably test this 285.49 area. I saw your comment, Al. And hey, again, if you entered on the break and retest of that trend line, that's fine too, right? Because you can get some pips there. Okay, sometimes we're all, don't ever get too greedy. Okay, right now we've identified some really good moves recently and been able to capture some really good moves, but know what's normal. Okay, that's why I gave you guys those normal ranges on Forex, because I know some of you've traded Forex a while, some of you are new to Forex. I want you to know what's normal, because catching a 30 to 50 pip scalp is not normal. Okay, the professionals aren't even looking to catch that much. If they do, great. They consider that, what I would say gravy, right? It's like, yeah, okay. They're on a scalp, 10, 12, 15 pips, they're happy because they're going to do that over and over throughout the day. And by the end of the day, they're planning on being at maybe, 75, 100 pips. That's a good day, right? Just one standard lot, you're looking at $1,000 day, $750,000 day. Okay, then again, if it's a day trade, 15 to 20 per trade, 15 to 25. If it's anything over that, they're happy. Okay, if they're looking for a short-term swing, maybe 100, 125 pips, something like that. And then when you start talking about like a week, say a week, then they're starting to look at maybe 250 to 500 pips, things like that on a single trade. But that's a longer term swing trade, or a medium term, I should say. Okay, but my whole point to this is I don't want you to get greedy just because we do see some of these that are producing great numbers of pips. So Al getting in on that break and retest of that trend line. Let's go back. Euro JPY. Right? Was it Euro? Yeah, Euro JPY. Okay. So instead of getting in here, he was getting in on the break of the trend line, which came through there. But look, that's still good. That's still good, right? Let's just say, and I guess I can just scrunch it back up. All right, so he would have been drawing that trend line right up through here. All right, and now I can come back over here. So let's just say he got in somewhere over here. I'm picking a random area, even right here. That's 117.78. Price has already been down to 117.37. 41 pips. 41 pips. Right? In 30, 1 hour, 30, 2 hour, 30, 2.5, in about 2 hours and 45 minutes. 40 some pips. That's a perfect day trade if that's all he got. And then you just do that 2 or 3 times in a day, that's 100, 125 pips. And again, I'm not saying that everybody's playing standard lots and all that. You can play as small or as big as you want in Forex. Okay, you might make $40 on that play, depending on the size of what you've played. You may make $410 if you're playing multiple lots, right? If you played 3 lots, then you would have made 410 times 3, $1,230. Okay? And anywhere in between, from 41 to 410, so on and so forth. Okay, guys, I'm going to go ahead and wrap this up. It's been an awesome morning. Last thing we're going to do is look back here at ES. Okay, ES is sort of stalled out near. It got way down close. Okay, and then it bounced back up, kind of about that 50% level. I would have been out already. If you took this trade, you're probably out. But that was one heck of a trade. So hopefully, somebody took it and caught some, made some money there. But guys, thanks again. I'll post the recording to this as soon as YouTube has it loaded. I'll put the link in the premium room, and then you guys will be able to go back and look at this and take notes and look at these trades, and hopefully it helps you become more consistently profitable. Thanks a lot, guys, and we'll see you later.